If I were to have placed the concepts in this unit in order of importance, this section on pips would have been one of the very first that we covered. Understanding the concept of what a pip is and how to calculate its value is a required foundational piece for your trading journey. So pip stands for percentage in point or price interest point. And a pip is simply just the unit of measurement that expresses the change in value between two currencies. Pips are the smallest fractional price movement that a Forex pair can make and be measured in. All Forex pairs are quoted with 5 places to the right of the decimal, with the exception of the Japanese yen. And the Japanese yen pairs, they are quoted with 3 places to the right of the decimal. And if you glance over here at the graphic on the right, you'll see just how the decimal places are structured. And just so that you know, typically the placeholders that will have most of your attention and will be used most by you to both place and manage your trades will be the ones, the tens, and the hundreds. And those are the places to the right of the decimal that most of the time you're going to be managing and really paying the most attention to. The 10,000s and the thousands, those will be more stationary. These will be the ones that tend to move more and the ones that you're paying attention to more. You will also look at this 5th place, but those are going to be the ones that tend to manage your trades the most. And since the zeros place is actually a fraction of the ones place, many times you'll see broker prices and traders just drop that 5th digit and refer only to the first 4 places to the right of the decimal whenever they're referring to, a price that pair is trading at. But just know that 5th decimal point is always there. So if someone says that price moved 1 pip, they are referring to the 4th decimal point that changed. And so you can always look at that price and you'll see that 4th point that either, went up or went down. That's the place point you're going to see that reflected in. So let's look at that a little bit closer. Here, I just broke down the decimal places a little bit further so that you can kind of see these price movements displayed and get used to what that's going to look like, because you're going to use this every day in every pair, anytime you're analyzing a trade, placing a trade, watching what other traders do. You're going to see everything referred to in pips. That's how trades are measured. And this will give you the key to understanding when somebody says it went up 10 pips, 70 pips, 1 pip, exactly how to read what's changing and how to know, even without somebody telling you, how many pips that is. So right here, if the Euro USD moves from 1.21000 and then it goes to 1.21010, price has had a value change of 1 pip. And the same thing goes if price moves from 1.21000 to 1.21100, price has now changed 10 pips. Same, 1.21000 to 1.2200, that's the hundreds place, and that would be a value change of 100 pips. And if the Euro USD moves from 1.21000 to 1.31000, that is a value change of 1,000 pips. I have broken down the same thing on the right hand side for if price was to fall, breaking it down by 1 pip increment, 10 pip, 100 pip, looking at the hundreds place here, and 1,000 pips reflecting here on the 1,000s place. Take time to really grasp the concept of understanding how to calculate and read the pips, you will use the pips again in every aspect of your trading plan. You'll use pips in calculating your position size, your profit and loss, your take profit levels, points of interest in the market, your stop loss position, as well as in your technical analysis, your broker spreads, and your overall pair bias. So this concept will be one that you will be able to eat, breathe, and sleep with ease very soon into your Forex trading journey.